After bouncing around quite a bit this week, investors lost interest this afternoon. The All Ords closed down 0.1%, and for the week, it's barely moved. The big miners and tech stocks bounced back after heavy losses yesterday. And the Australian dollar's also had a big week, with big falls and even bigger jumps. It's now back above 73 US. Overnight, Wall Street was still nursing disappointment that the US central bank failed to come up with more blank cheques. That's given US Congress is unable to agree on a new stimulus package. Meanwhile, the UK's central bank floated the idea of negative interest rates to help cope with a Brexit bomb, and that sent the FTSE down. Following Australia's better-than-expected jobless data yesterday, US unemployment claims were also a pleasant surprise overnight. Can these be believed? Well, there is a bit of scepticism, particularly about Australia's drop in unemployment to 6.8%. But there's been a steady improvement in job ads, and that line is much better without Victoria. Meanwhile, the Reserve Bank's just released interesting charts on borrowers. We know Australians en masse have been squirreling away the extra COVID cash that's been pumped into the economy, and this chart shows just how much. While the amount paid in interest is coming down, homeowners are putting more and more of their spare cash against the mortgage, say in offset accounts. And that's good news for household debt, but bad news for local businesses wanting more sales. And despite no indications that rates will be rising anytime soon, borrowers are rushing to lock in. The proportion of owner-occupiers on a fixed rate more than doubled in the past couple of months. You got to know when to hold them, and that's finance.